Hey guys, what is up? It's Dusty here and welcome back to another episode of the Daily Crypto News. And oh boy, do we have some juicy crypto news today. That is mostly because the crypto market is pumping. Yet in this video, I don't want to focus on the news. I have some extremely important updates I need to share with you guys about what I think is best to do with our money right now. I'm basically going to prepare you for a couple of different scenarios that are very likely to happen and some things to watch out for to hopefully make more money in crypto right now. Having said that, guys, if you enjoyed these daily crypto videos, make sure you press that like button, and I really did my best to dive deep and give you guys this specific video. So again, if you want to help out with the YouTube algorithm, make sure you press that like button. So for right now, guys, let's take a little bit of a look at the crypto market. You can see most cryptos are in the up right now, which most likely is because the stock market was doing pretty positively. Now, obviously, the stock market is closing the weekend, so we cannot say that right now the S&P is pushing Bitcoin, but it is reasonable to assume that because the S&P has been going up, and NASDAQ for that matter too, over the last couple of days, basically just recovering, that there's two main scenarios. A bull trap, basically trapping all the bulls in right now before we go down harder, or recovery. And if we take a look at the Bitcoin charts right here, what I've shown you is the two most important areas for Bitcoin right now. And remember, guys, I only do TA and I only put things in these charts when I'm recording, if there's a critical point. So when you're seeing these blue boxes right here, understand that this is what we covered the last time we were doing a live stream, which has been 2 weeks ago maybe, the last time we did an update on Bitcoin price and whatnot. So the fact that I'm doing an update right now, you can understand how important it is because I don't like to show too much technical analysis. But right now, we're facing a battle between the $33,000 level for Bitcoin and, you can see it critically here, I'm going to say it's about 38.7. And remember, guys, these blue little boxes here, I have not put in today. So the fact that we're facing this battle between these two zones exactly shows, first of all, the power of looking at the price in the sense of support and resistance. Because again, we knew this before it was basically happening. And the fact that we can make a whole ton of money if we interpret the data properly, in our own opinion. Remember, guys, we are not financial advisors, we're not legal advisors. What we do on here is try to interpret the data in the best way possible, try to interpret all the news to our best advantage, but that does not mean it's the best financial choice all the time. We can always make a mistake, and we can end up poorer than we started at. But for right now, I want to tell you guys, there's two strategies we're thinking about, and I'm going to tell you guys exactly why and how. Strategy number one is we're actually opening a long position either right now or a long position after we basically crossed above this $38.7 thousand mark with confirmation. And that looks like, I guess it might be happening right now already. Basically a close above this point with a confirming candle in the green yet again. We can open a long position at that point, preferably even crossing above 39,000. But again, the closer we get to 40, the scarier it's going to get. So if we want to take a quick scalp, we'd actually close it below 40. That's what a couple of people are going to do. Then again, 40 is a psychological barrier, not actually a price action barrier, because that barrier is all the way at 41,000. So I honestly think that we might be able to take it easily towards the $41,000 mark before actually taking a little bit of profit out of that. But there's also a scenario number two. You know why I'm telling you guys that? It's because I appreciate you all. I enjoy you guys all watching my videos. How do I say that properly? I appreciate that you guys all watch my videos and I enjoy making them for you. Let me explain. This is going to sound a little bit controversial. This is going to sound a little bit scary to some. But trust me that I have no ill intent in telling you this. I am only telling you this because I'm looking out for your portfolio. And I'm telling you guys this not because I want to FUD, not because I want to do any harm, only because I honestly believe this might be what a couple of you guys need to hear. And that is that there's always a possibility of going down further, and we need to prepare for that. All right? I've told you guys my strategy before, but there's a critical piece which is not really out there too much or that people don't really consider. And that is, I would do way better if we're in a bull market. Critical, right? I think the majority of you guys are like, yeah, duh. Of course you do better in a bull market. Things go up, money go up, of course. But what if I told you that it's not actually everybody who makes more money in a bull market? There's actually, let's say about 40%. I think it's less, but you guys get it. Like a lot of the people are making money in bear markets. How? Why? Because they're shorting. Now, why are they doing that? Not because the majority of people don't believe in crypto technology. The majority of these guys know this asset will go up over longer periods of time, but they short it. Why? There's two main reasons. One, they see an opportunity. Two, They see an opportunity in a different sense. There's always, of course, opportunities. And to be honest with you, it's split up into two different parts in the sense that some are just bearish on the crypto. They think it's going to go down right now. Others are not sure, and so they hedge. And that's the option that I want to kind of tell you guys about right now. Let me explain it to you like this. Let's say we have a portfolio of $1 million in various different altcoins, right? Which is very reasonable for quite a lot of people watching. There's a very high likelihood that if we're in a bear market, that the altcoins will drop 80, 90%. Bitcoin might drop 50, 60, 70. So as at that point, we're down 75% of our money and there's no benefit, right? Well, that's scenario number one. Scenario number two is we sell everything, but then we have the negative side of what if we did go into a bull market and then we basically sold the majority of our alts, which can go 10x in a bull market, maybe 20x in a bull market. And if we do go bullish, we basically have nothing. So that's also, those are two extreme options. There's a middle one though. And this is a controversial option. Why? Because you're basically doing a really contrarian move. What we're doing, and this is what a lot of guys do, and even I'm doing it a little bit, we have all our alts. We have a lot of shit coins, a lot of crazy altcoins. We have some Bitcoin, I guess. Just things that will do really well in a bull run. I'm talking of 10xing at least within a year if we go bullish again. What we're also doing, however, is with a small portion of our money, opening a leveraged short position. Why? Guys, over on Bybit, I've shown you guys multiple different times how you can open a short position. Right now, I'm logged out for some reason. And again, it feels really contrarian to open a short position right now after things are looking to finally clear back up again. But you got to remember, there's two main reasons. One, it can be just a little bit of a trap where it's basically drawing all the people in right here. It's drawing all the people in before moving down further. And even though I don't think that's likely, I think we're going to be going up, it could. But the most important reason is, let's say we do go up. Let's say we do go up. We're going to exit our short position in the sense that we might get liquidated if you don't add more money to it. But more importantly, guys, let me think with me here. If we open up a short position, which is relatively small, let's say we have a $1 million portfolio and we open up a short position with $10,000. A lot of money to lose, right? If we do it with leverage, it might be a little bit more than that. If we go down, however, let's say 40% in this little realm, you know the money we make on that short? That's going to potentially compensate a little bit for the losses that we make in our main portfolio. So what we're basically doing essentially is just hedging against a very big dip. Now, the negative side is that we're going to make less money, basically, if we go up, because we might lose our short position. We might have put some money into that, so it's annoying, blah, blah, blah. But in the sense of going down all the way, what you've basically essentially done is, instead of only losing money when it comes down, if you don't want to sell your tokens, you've now got yourself a little bit of a factor that's making you money if we were to go down. And because it's a leveraged position, you can make more money going down than if we were not to. And that might kind of compensate you for the crazy gains that would most likely flow if we were to go up. Because again, I got to remember, you guys, if we go up, I make most likely 10x, if not 20x, if not 40x. If we go down, I lose everything because I don't sell, right? Because you're losing tons. And so let's say the $10,000, just a hypothetical, is relatively small money to lose for the gains that I would make for every percent that we go up again. So yeah, there's just a little thought that I kind of wanted to share with you all. It's very important to understand that you should always hedge. And my main little strategy that I usually share with guys is have a stash, for example, an 80-20, 80% hodl, 20% trading, and use that trading to just make money all the while your hodl stash is just staying the same, and you might increase that with your savings or whatnot. But there's a critical factor in that, which is what I always say. If you're going to add to your crypto portfolio, never add all your money at once. Always do it in layers. So that you can do by, for example, putting in different price layers. So you, for example, have an order at this level, an order at that level, an order even lower. I've shown you guys, for example, how I placed all my XRP orders at 71 cents, 61 cents, 51 cents, and whatnot, just to basically make it so that if we get a crazy dump, then I'm also going to be buying. But that's one thing, or one way to do it. But then you're basically buying lower and lower and lower. That's different from shorting it, which is basically making money the lower it goes. It's a little bit different, but it kind of comes down to the same thing. So if that's really more your thing, I guess it's still the rules in the same sense can kind of apply, where you just basically buy lower the lower it goes. And you just consistently keep that up. You'll just less, you in that sense, you'll make money every time it comes back up a little bit instead of making money on the actual downfall. But the reason I'm telling you guys this once more is not because I want to harm anybody. It's only because I'm thinking, well, if we do end up going down further, maybe some people are like now, thinking, maybe this actually may be a smart idea. Because I think the majority of us, and I speak, I think for the majority of us, that we'd make way more money if we're in a crazy bull market, which I hope is going to happen. I honestly hope that it's going to happen tomorrow, that we're just going to pump 59,000% to become multi-trillionaires. Never know. And so you should prepare for all that stuff. And once more, I am bullish. I am sticking with crypto for the long term. But if we can hedge against some negative times, and this is actually how a couple of my YouTuber friends also told it to me, it's like, you have two scenarios at any one point, go up or go down. And I told him like a little bit of a joke, like, hey, duh, you go up or you go down, duh, stupid ass. But he has a very valid point in the sense that you never know for 100% certain which one's going to happen. And you got to make sure that whatever happens, you'll actually end up better than where you were before. Or at least that you'll be making progress to some degree. You know what I don't want to do, guys? Sell my crypto. So I'd rather have a short open. And I don't have the biggest short. My friends, they short with millions of dollars. I don't dare to do that. Just going to be honest with you. But I do have a short open almost at all times, purely for what if we crash further? Because if we go up, I know I'll make 10 times, 15 times the amount of money that my short cost anyway, within the smallest little, gain. So that's just a little thing I wanted to quickly share with you guys. And then the couple of things I wanted to share is, I guess, investment strategies and in terms of what I look for. But I guess I might have to split that up into a different video. What it kind of comes down to, guys, is looking for where the big money goes. This whole story here is based upon the idea that a lot of bigger companies are hedging. You know, you can hedge by, for example, going one part crypto, one part US dollar. Theoretically speaking, these things are contrasting because, well, Bitcoin goes up, and the dollar stays either stable or it basically goes down in like an inverse correlation. People with, I guess, larger portfolios always do this. Before, we used to think that the stock market and Bitcoin would be a good little hedge for each other, but it's not. But in a good stock portfolio, you always do that. In crypto, it's pretty hard to do, though. So the best thing to do is hold stablecoin. But that's basically a stable thing. It's not really hedging completely, depending on how you look at it. It is kind of, because if crypto goes down, the stablecoin stays the same. It doesn't go up, though, right? We want an inverse correlation where if Bitcoin goes down, this thing goes up. And the best thing you can do is literally short the thing which goes down in that sense. It's like to keep it in balance, right? So, yeah, hopefully I'm not going to get too much hate for this. I'm just trying to share some insights and share some thoughts. If you don't want to do it, completely fine. And my strategy comes down to following where the big money goes. If, for example, if guys like Coinbase, right? This is very important to understand. Coinbase has a ventures part. And I'll make a specific video going even deeper into this. Coinbase has been listing coins it invests in without disclosing research find. We knew this. We've known this for years, I think. And I've shown this multiple times in my Patreon videos. I think a couple of times on the channel too. Just so you guys understand, Coinbase is a venture arm, and they basically invest in new crypto projects and whatnot, right? They've invested in a ton of different things: Solana, it says here Orca, Solend, Cosmos, Umi, Algorand, Folks, Polkadot, Akala, Moonbeam, Near, Polygon, and Bitcoin, and multi-chain future of France appears bright. Yada yada. They've just invested in a ton of different things. You can scroll through here for a little bit to find like hundreds of projects that they've invested into. Or you can find here a little bit of a crunch base to see what type of companies they're investing into. If, for example, it turns out that they're investing in this for real, again, it might be something to look forward to or into in terms of buying. But there's a little bit of a list here on CoinMarketCap with the watch list called Coinbase Ventures Portfolio, basically everything that they held or hold. And what I basically told you all a couple months ago or years ago already maybe is what we did at that point. I think we bought a ton of Algorand. I'm not exactly sure which one anymore. But what we basically did was we went to look for every single token that Coinbase Ventures was involved in and buy them all. Because the moment that Coinbase announced a listing, which they usually do for the Coinbase Venture type of cryptos, which again is just cryptos that they help develop, usually that's their strategic value, and that's why they get into strategic round, because they have partially insights, but most importantly because they can provide the listing eventually, which is why they get a ton of tokens in the start, which is why they list it, because then they make money. And we basically buy those because we know they're going to get listed and we're going to make a fuck ton of money. So, yeah, that's one other thing, to follow the money in that sense. Look at where the bigger capitals are investing into, buy those tokens. Works better in a bull market though, which is again why we hedge with the shorts. Yeah. Hopefully I'm not going to get too much hate for this, but just know there's no ill intent. I'm just meaning this is a good little update for you guys to kind of think about. And let me know in the comments down below if you think it's a smart or stupid idea. Honestly, I do want to open up long positions here. And the fun fact is, I can actually open up a long position and a short position at the same time. You might think, oh, that would have that makes no sense, right? Yes, but no. Sometimes, depending on how you structure these things, you can also, by the way, open up different altcoins in terms of short positions. Sometimes what we do is I, for example, open up a, let me start like this. You open up a Bitcoin to USDT trade in terms of a short, and then you open up a Bitcoin trade in terms of a long. So it kind of doesn't conflict with one another. Or you gotta have really quick fingers in that sense. But sometimes I do that to keep my position in terms of where I bought in or where I sold, literally. Longer story for a different day, but yeah. For example, right now, if we go back up, I might still have my short position open just purely because I don't want to close it. But I guess if we're thinking we should take this trade, which is still rather risky, by the way, because we're still going to work with a stop loss, we can theoretically speaking close our short for a little bit and hope to open up a long position here, take it to all the way to 41,000, for example, and then open up another short position. Again, we could. Or we could just, as we have our short position open, try to make money along the row, but keep our backup of a short. It just depends on what you think is better. But I'm just letting you guys know some thoughts. So yeah, that was it for today's video. Hopefully you enjoyed it. If you did, make sure you press the like button and subscribe. Or understand once more, I mean no harm with this video.